Hello, my name is Steve Bigelow with the Candlestick Forum. We can see that the market is still in a sideways mode, but this doesn't deter taking big profits or identifying the profitable candlestick patterns. As we can see, the Dow has a resistance level up here. When they hit it, they bounced down to the 50-day moving average and bounced back up. Except this is not a reversal signal. This is a bounce. So we still have to be leery that we're in a sideways trading range until they can break out through this level. On the other hand, the NASDAQ did an indecisive trading day after a little MorningStar signal right here at the resistance level. This allows us to have a much more clear analysis of where the market trend will go based upon how they open the market tomorrow. If they open a positive, doing a bullish doji sandwich, breaking out through this level, tells us wave 3 is in progress. If the pre-market futures are showing things opening lower, it's telling us once again, after the doji rule being that the price will usually move in the direction of how they open after a doji. If they trade lower, we know that we shouldn't be going long aggressively. Again, this is not rocket science. This is just identifying what investor sentiment is doing at important technical levels. And this is what makes the candlestick patterns much more effective. Victoria's Secret had a dumpling top. And what happened right here at the last support level? They gapped it down. And this is the expectation we have from a dumpling top, which is the opposite of the fry pan bottom. That there's a lot of selling force building up. And even though you're in the oversold area, remember, candlestick analysis is identifying candlestick sell signals when you're in the overbought condition. But patterns are going to confirm usually when stochastics are already in the oversold area. These are kind of trading rules that we teach people so that they gain a much bigger perspective or much stronger perspective of what's going on in investor sentiment. Domino's Pizza, you can see where they opened on earnings day, right smack dab on the 200 and did a huge bearish engulfing signal, making this dumpling top more indicative that the sellers are in control as long as you're below the T line. This is basically what puts the probabilities of every trade you put on in your favor, knowing what investor sentiment is normally going to do. Team, same scenario. Failure at the 50 with a bearish left-right combo. Failure at the T line. And then kind of a gap down through this support area, telling us there's a lot of selling strength, a lot more downside potential. And the same scenario is true on the bullish side, obviously. Our recommendation last week on MRSN was based upon the trend kicker signal. It opens here, closes here. And then they gap it up and go the opposite direction. That tells you there's a lot of bullish support there continuing to move this up. So just knowing some of the trading rules of what should happen based upon human nature. Carvana had the message signal. They gapped it up, but look where they closed it, way down at the lower end of the range, not a bullish signal. However, what was the message? The message was they gapped it up, so what do we wait for? The selling to stop and the buying to start, because this is already indicating there's been a strong change of investor sentiment. We're just waiting for the profit taking to be over. A good, strong entry point would have been where it opened the previous day, because that told you the bulls are back in control after that gap up. So it doesn't take much. It's very simple candlestick scanning to find the high profit trades. So we still put out the invite. Join us for 2 weeks free trial on our website chat rooms. This gives you an opportunity to see what everybody else that has been using candlestick analysis for years, where they identify which trades are setting up, giving you at least a good supply of charts or trades to look at, number one. And number two, it greatly expedites your learning process. Remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's basically what candlestick charts are, is the graphic depiction of everybody buying and selling during a specific time frame. Come join us. We'll see you in the chat rooms.